All right. Welcome, Jerry. Welcome, everybody. Today, I'm going to introduce you. It's my pleasure to introduce you the CEO of Wealth Dynamics, Jerry Feta. Jerry Feta and I have known each other for some time now, and done a lot of business together with his business and with Mint Builder. We've done some collaborations, things like that, and we kind of our businesses have kind of they just kind of coincide because we're all about helping people to try to understand what true wealth is and learn more about finances and kind of just help people to get ahead, being stuck in this trap of paying the banks first and making sure they're the ones getting the interest, and just all the stuff that we were taught from kids that that's just how you're supposed to live the American dream, not knowing what actually the American dream is. And that's what we're going to kind of get into a little bit with this new product. And we've kind of rebranded here at Mint Builder called MySacred Account, and it's something that I personally started using. I think it was back in June, if I remember right, Jerry. I think you talked to me about it, and my wife and I both are using it, and it's a great product. And we're going to talk a little bit more about it. But I'm going to go ahead and ask you some questions, and then you can kind of elaborate on those things. And kind of go from there. Then at the end, we're going to open it up for Q&A. So if you guys have questions, make sure to write them down. We can unmute your microphone, or you can, if you're mic shy, you can always type the questions in the chat as well. So yeah, so I don't know, maybe Jerry, if you want to just talk a little bit about who you are and where you come from first, and then we'll get into some questions.
Yeah, totally. So as Matt had said, I'm the CEO and founder of Wealth Dynamics. And so I've been a financial professional for 10 or 11 years now. So I got in the financial services industry when I was 18 years old. I got licensed with Wall Street. I was doing retirement planning, stocks, bonds, mutual funds, that whole thing. And so that's kind of been my background. And as I started learning about money, I started learning a lot of things that are different when you look at what are the wealthy doing versus what are we being told to do by large institutions, right? And so, one of those things, for example, the wealthy, they purchase gold and silver. That was how I met Matt. My first silver ever I purchased through Matt. And so that was one of the things I looked at. The second thing on this is the sacred account, right? So we're going to talk today about how the wealthy have used this one, not quite as long as they've used gold and silver. Gold and silver have been around 6,000 years, right? But we're going to talk about a tool today that's, it's got a 1 to 2 century long track record of banks, corporations, top 1%ers using it. So my background with this is I've spent the bulk of my professional career learning about this, applying it. I've used it to grow my business. I've used it to invest. And I'm probably like a lot of you guys. I didn't grow up with financial literacy, and I didn't grow up with an inheritance or my parents giving me money to start a business or any of that. I was a C student. I lived in Alaska. There's 62 kids in my graduating class. My parents were divorced. We were lower income family. There's no reason why I should know this information, let alone be winning with it. So that's my hope today as we're going through the webinar. For those of you that are live and those of you that are watching later, is that we give you something that either you didn't know about as an option and now you do, or maybe you heard about it and now we gave you clarity and you feel like you understand how it works.
Exactly. And what's kind of cool, and Jerry and I hit it off pretty well, meeting up, is that we have the same background too. I grew up the same way. It was this, that kind of lower income family. We're taught that the people who have money are bad people just because my family didn't have money, and you have to break through those mindsets. And this is a huge way to get yourself out of that hole, at least on the physical financial side. So let me ask you, Jerry, first, what is the sacred account? What exactly is this thing? It sounds cool. It sounds like this mystical thing, but what is it actually?
Yeah, so it's actually a form of life insurance. And when I say that, I like to specify that there's a lot of different kinds of life insurance, and this is probably not the one you're used to seeing or hearing about. So specifically, it's called high early cash value dividend paying whole life insurance. I call it the sacred account because A, that's a really long name. I don't want to say high early cash value dividend paying whole life insurance every time I explain this to someone. And B, it is used for a sacred purpose. We're going to talk about today. There's really only 4 things that I would use this account for. And it's a wealth building tool. And so for me, financially speaking, that is sacred. When something is sacred, it's set apart, it's different. And so this is exactly that. So It's a form of life insurance. It's something that the largest banks and corporations in the country have used and continue to use for a very long time.
Yeah, that's awesome. And knowing that, what would you say are some of the like top benefits then of having this form of life insurance, the sacred account?
Yeah, so there's really about 10 main benefits. So the first one is that it is guaranteed to grow. And so it's got, typically you'll see about a 3 to 5% average compounding annual growth rate. And the thing that's cool about that is anyone can guarantee anything, right? But when you look at a guarantee, you've also got to look at, well, who's making that guarantee? And so the insurance companies that we work with on the Sacred Account, they've done this for 150 years in a row or more. Meaning that they've actually honored that guarantee through the Civil War, the Great Depression, 1950s recession, 1980s recession, the tech bubble, the mortgage crisis, COVID, you name it. They continued paying out that return, and so that's a great benefit. The second one is guaranteed against loss, right? So again, guarantee is only as good as the guarantor. It's never actually lost money, and so they've kept that promise. For almost 2 centuries now. We made money, we didn't lose it. It is protected against taxation. And so we'll talk about how that works today. But the idea with this is the money that you put inside this account is the money that you're never going to pay income tax on ever again. And so that's a big deal for me. I'm not big on having to pay taxes legally.
Okay.
If I can get out of it, I want to. So if I can hide money, IRS can't touch it, that's great. So that's the third main benefit. It is protected from creditors. It's protected from lawsuits. It has privacy protection. It's a one-way contract between me and the insurance company. And so legally that can't be altered. It can't be changed. It can't be interfered with. And so that's an awesome benefit. It is fully allocated. And this is something that if you're a Mint Builder subscriber, you're probably familiar with the fractional reserve banking system. When you deposit your money in a bank, they're not keeping it in a shoebox in the vault till you come back next week and pull it out. They're loaning it out to other people. Currently, the reserve requirement for banking is 0%, meaning they can loan out all of your money. There's no requirement for them to keep anything. So when the bank says, hey, your money's guaranteed, well, we all know that it's not actually there. And so that's something that's different with the Sacred Account. The money that I have in my value in my account is actually allocated. It's there, right? Similar with gold and silver. If I do storage and it's allocated, it's actually there in the vault. It's not like they're leasing it out and loaning it to other people. So that's a benefit. And then it does have insurance on the solvency of the insurance company itself. So if there's ever an insolvency incident, an insurance company can't pay, I'm covered with that. And so those are the top 8 benefits. The final 2 come down to the borrowing, right? So I have this account, like I mentioned, it's growing at about a 3 to 5% annual return, tax-free. And I can borrow against that account and it still grows while I use it. And so my cost of interest is very minimal. It's usually going to be 1 to 3% if I structure things correctly. And so what that means is I can put in, let's say, $10,000 into the account. That 10,000 is going to grow at 3 to 5% tax-free. And I can borrow typically 70 to 90% of that number and use that for growing my business or investing in real estate or whatever it is that I'd like to do with it, paying off consumer debt. And I'm still making the 3 to 5% like the money never left. And so that really is like a way for me, Matt, that's actually me practicing fractional reserve banking with my own money. I can borrow against my deposits.
Doing what the banks do.
Exactly.
Yeah. And I can tell you firsthand, for me, I've used it like right away. As soon as I put it in there, I used it. And the first stage is, if depending where you're at financially, if you have consumer debt, like say credit card debt, and you're paying astronomical, credit card fees, and this is a kind of like a forced savings. You can make yourself set up a, set it and forget it savings, but you're not really, it's not really costing you. It's like buying precious metals, sort of, because with precious metals, you're transitioning paper fiat money that's worth less than worthless, and you're putting it into something that's that's actually beneficial to you. And I've used it the same way, like getting something done around the house, like installing new plumbing, putting a different bathroom in the house, and then using my Sacred Account to to fund it. So I'm using my own bank account, which I believe doesn't the Rockefeller, the Rockefeller family, didn't they set up a Rockefeller family bank account where even today, generations and generations later, they still borrow from that? Is that correct?
Yeah, that's correct. So they have the Rockefeller Family Trust, and there is actually a requirement that if you're a beneficiary of that trust, you have to have this kind of life insurance. And so basically what happens is if I'm a Rockefeller, I can pull money out of the trust per the trust provisions. I can take distributions, but I have to have this life insurance policy in place. And then they make the trust the beneficiary. So when I pass away, that death benefit basically reimburses the Rockefeller Family Trust. And so that keeps their wealth perpetuating. It makes it generational. I think that trust has 5, maybe 6 generations of Rockefellers that have been living off of it when the old man died 100 years ago. So that's pretty cool.
It is. It's awesome. It's something that keeps going on and on. And like you said before, some of the benefits, they're overwhelming. I mean, you're talking, you went through all those benefits and it's like a no brainer, like what, and that's what, why I jumped on it too. I always had life insurance, but I was under the Dave Ramsey approach, like get the cheapest life insurance you can get. And that's fine for that purpose. But with this kind of setup, you have all these benefits. Plus the side perk is you also have life insurance, and it's a kind of a really cool thing. So getting into that, what is the difference then between what people would call normal life insurance and the sacred account?
Yeah, that's a great question. So the sacred account is a form of whole life insurance, meaning you're going to have it in force. It's going to pay out no matter what, right? So like the average whole life insurance policy, it's permanent. And so if you live to 121 years old, they're going to pay the death benefit to you while you're alive still.
Okay.
And so between now and 121 years old, if you die early, they're going to pay it to you for dying. But no matter what, that payout has to happen. And that's the main difference. If I do, quote unquote, normal life insurance, that could mean I'm doing a term policy where I'm paying for insurance for 20 years. And after 20 years, I don't have it anymore. Or it could mean that I'm doing, a permanent type policy and it's just not designed for borrowing against. Less than 1% of life insurance policies are designed the way that we're talking about today. So the real thing that I look at here is it is life insurance, and that's a primary thing. Mm-hmm. And so I want to think about that. For me, when I think life insurance, I'm thinking, okay, I want to, it's a game. If I'm trying to build wealth, the easy way to win a game is to cheat, like to secure the outcome. And so that's what I'm doing here is I'm saying I'm going to build financial independence and freedom for my family. But if I don't, for some reason, make that happen, this life insurance policy is going to guarantee that it happens anyways. And it's not an if, it's a for sure this will pay out no matter what. Right. So I love that part about it. But then the second part is I can borrow against it. And that's where we're to design this correctly, we're minimizing the insurance costs, we're maximizing the amount that goes into cash. And then we're getting a growth rate from the company. The reason why you get that rate of return is because when you buy this type of insurance policy, you're quite literally being made a shareholder in the insurance company itself. And so when they're profitable, they're sharing that to you as a dividend, right? And so that's where that money comes from. So if I have a policy with one of these companies, I actually am an owner, I am a shareholder, I do get dividends, I do get that same treatment, but they're not publicly traded. So nobody can just go buy shares, right? Like they issue this only to someone that has a policy. So that's something I love about it, and when I'm working with like any type of financial tool other than gold and silver, like gold and silver is like a real tangible item. But when I'm working with like bank accounts or investments or insurance policies, the number one thing that I'm looking at is where are the aligned interests, right? And you don't get much more aligned than partnership. And it puts me in a position where if I'm working with these giant multi-billion-dollar insurance companies, they're not going to do anything to me that they don't want to do to themselves, because we're partners. Right. And so they want to make money. I make money when they make money. If they do something to me that's not good for me, it also is happening to them by the fact that we're partners. And you don't see that in the banking industry. You don't see that in Wall Street. And you don't see that with a normal insurance policy usually either. And those are the real key differences.
Yeah, exactly. I love it. So again, you're technically like kind of like breaking the rules of the standard 99% of what we're taught to do and what, the way a whole system works. We're bending the system or breaking through that system. And we're actually doing what the banks do. We're doing what the Rockefellers, the JP Morgans, and they did way back. And now still today, their family is doing that. It's like we're actually doing that. And so I think Grant Cardone is one that said, he was talking about having an unfair advantage, and when you were saying like cheating sort of, we're not taught in school, we're taught if you cheat or if you have the unfair advantage, that that's wrong, and why is it wrong? We're not talking about the immoral cheating. We're talking about cheating that system that we're stuck in, the rat trap that we're stuck in. We're talking about cheating that system. We're talking about having an unfair advantage above that system to get people out of that system. That's what we're talking about. And so that's what the ultra elite do and have always done for, like you said, nearly 200 years. And so this is what this allows you to do, to get into that their system and out of the system that we're taught through the cookie cutter approach, I suppose. And so if somebody does have the sacred account, and now we understand you can actually borrow your own money and then pay yourself back, couldn't they just invest their money somewhere else? I mean, what's the purpose of having this? I hear this kind of stuff. I've read lots of books, as I know you have, and people say, well, I could just invest my money in the stock market. I can just invest my money in cryptocurrency and become the next millionaire, crypto rich and that kind of stuff. So what's the difference with investing your money into your own sacred account versus that?
Yeah, so the key difference is that the sacred account is not actually investing. It's more of a form of saving. So similar to gold and silver, we don't call it an investment. It's a store of value. And so when I'm talking about investing, that's a different conversation. So let's say I do want to do stocks. Do I want to do stocks? And let's say I just making numbers up. Let's say I can make 12% in stocks. Do I want to take my money and put that in stocks and get 12%? Or do I want to take my money, put it in the sacred account first, where it's going to make 3 to 5%? Borrow against it, it's still making 3 to 5%, and then go do stocks and make 12% and also 3 to 5%. And that's kind of the conversation of like, it doesn't have to be either or. Whatever your asset class is, your asset class. Personally, I'm not into stocks. I don't think that it's a fair system. It's manipulated. Some people are. I'm not into crypto. I'm more into real estate. I'm into my business. I'm into investing in tangible things, right? So for me, when I do the sacred account, I'll put money into it, I'll borrow against it and do real estate. And that real estate might pay me 12, 14%. And I've still got that money growing at 3 to 5% at the same time. And that dollar literally is in 2 locations at the same time, making me money rather than putting it just into the real estate directly.
Yeah, that makes a lot of sense. And yeah, I think that's the key thing is it's kind of like when we talked about precious metals, you're not investing, you're literally just saving with tangible wealth. You're converting back to real money is what you're doing. And you're saying this kind of the same thing with the sacred account. You're actually saving. It's not investment, your savings. And it just happens to be that your savings earns interest, kind of like old fashioned savings used to, like where it's actually earning real interest, and having the ability to earn dividends is insane. It's something that most people, this is kind of maybe terminology that they're just not used to hearing. It's, it was new to me too, hearing this kind of stuff, year or so back. Even though I've done lots of reading in different financial books and things like that and studies, it's just not a normal concept anymore, unfortunately, even though it used to be when you go back a long way. And so thinking of it as a way not to be in competition with investing, but a way to help you elevate your ability to invest, I think is kind of like, if I'm to sum up what you were saying. So and we're talking about cheating the system too, kind of, like we're talking about precious metals, so can somebody would it be smart to use, and I don't know the answer to this, but would it be smart to use their sacred account to purchase precious metals maybe? Does that make any sense?
You could. So there's a couple things here. So typically when I borrow against my sacred account, it's going to be for something that either reduces my expenses or increases my income. Right. And so not to say that you couldn't use this for precious metals. What I would look at is when you take a policy loan, this is getting a little more nitty gritty. I borrow against the account. I put it into, let's say an investment, or I've paid off debt. I actually want to pay myself back. Right. And this is a weird concept because most people think, well, why? Like I don't want to borrow against my own money and not pay myself back, or pay myself back and have this extra thing. Right. So the first thing I want to answer is, why would you borrow against your money in the first place? Okay. As an investor, there's 2 things I hate more than anything: losing an asset and paying taxes.
Yeah.
And so when I sell an asset, I'm doing both of those things. I no longer have the asset because I got rid of it, and I had a gain, so there's taxes due. And so that's why we borrow against the sacred account rather than selling it off and getting rid of the thing that's producing that 3 to 5% and giving me all this protection and benefit. I want to keep that. And then I don't have the taxes. Now, because I'm the bank, I'm also going to pay myself back. I'm not required to. The insurance companies they don't care. They're going to say, hey, you never have to if you don't want to. But think about it. If I'm the banker, in this situation, I'm always going to make sure that borrower pays their loan back. In this case, I'm the banker and the borrower. So I need to make sure I pay my loan back. And so, paying a loan back to yourself is a function of saving. It's the same thing. If I'm paying my own loan back, that money becomes available to me again immediately. I can use it right away. And so when I do this kind of investing, I want to make sure that can happen. And so if I'm investing in something that doesn't necessarily produce income or doesn't necessarily lower my expenses, then it doesn't really pay for the cost of the loan. It doesn't pay itself back over time. Now, where you could maybe make gold and silver work on this is, let's say that you're playing the market a little bit. And so you're like, okay, good, I'm going to buy it at this price. And I know over so much period of time, it's going to go up to this price. And maybe at that point I sell it and pay myself back. That can work as well. That's a little bit more of a timing and speculation game, but certainly it's something you could do.
Yeah. And that without letting the cat out of the bag, I know there's something coming here at Mint Builder that we're going to call My Mint Wallet. And that would be something like that. It's kind of like a pool sharing where you can digitally, you can make a purchase, sell it right away. It's kind of like hedging, but that's a whole different thing. So that makes sense. What you're saying then. So I think of it as a simple, because I love numbers, I love finances, I love thinking about, if you just think of keeping a ledger, what you're basically saying is, if you want to keep a ledger of where is your money going out. So each unit of your money is like a soldier going out, and it's supposed to return something to you, whether it's something of emotional benefit or something of financial benefit, or whatever that may be. And so you have this ledger, and so when money is going out of the ledger, you want money coming back and producing. And so basically your goal is to have multiple revenues of things coming in to build more than what's going out. You want more coming in than what's going out. And this is a savings plan that allows you to do that. But then you would want to turn around more and invest that into something of whatever you believe in investing in, like whether it's real estate or whatever that may be. So that makes sense. That'd be a better use of the sacred account. Or first steps, getting rid of consumer debt. If you're paying high interest rates on something, didn't you just recently purchase a car? Did you use your own bank to do that, your own sacred account to purchase your own vehicle that way, right? So
yeah, and that's kind of like it. Usually it's going to be one of four things you'd use this for. The first one is consumer debt, right? So if you have anything that's got credit cards, student loans, anything like that, auto loans, you can borrow against the account, pay those off, and then you pay yourself back rather than that debt. So that's the first thing. Second is going to be reserves. So like, for example, rather than saving money in a bank, I just leave it in my sacred account. It's got more protection. It's allocated. It's not part of the fractional reserve banking system. And so that's something I believe in, is I want to save money there. I can self-finance large purchases. So like Matt had mentioned, I've done cars, I've done furniture, I've done, all sorts of different larger expenses through my sacred account, because I want to make that interest on my own money. We're talking to clients recently. We're like, hey, you could do your Christmas shopping with your sacred account. It's going to happen every year. You're going to spend $2,000 on gifts and travel and whatever. So you might as well fund a policy, take a loan against it, buy the presents. All the money still grows like it never left. And then you just pay yourself back throughout the year. And then over time, you've got more money than you started with, right? And then obviously investing, if you're, we talked about investing in real estate. If you're a Mint Builder affiliate, like you can be investing in your business here with marketing. Like there's so many things you can use this to generate that income.
yeah, that makes so much sense. And I know we've talked so much about I watch your stories, and you're talking about the Christmas, how it surprises us. You got the holidays coming up. He's like, you had 12 months to plan for it. And I like the idea. If it's going to cost you interest because you're racking up, credit card debt or something, then this would actually save you. The concept behind this is mind blowing to me, that let's say that you have $10,000 in your sacred account, like you mentioned earlier, and you borrow $8,000 to make a major purchase, and you're thinking, well, if you did that in anything else you had that invested in, and you pulled out the $8,000, what are you going to earn interest on? The $2,000 is still sitting there. But with this, it's not the case. You borrowed the $8,000, but you're still earning interest on the full $10,000. That's insane to me. It's like, why were we not taught? This is like a basics 101 type thing. Why were we not taught this basic financial understanding when we were younger. I guess it's just mind blowing that that's just something that something that I've learned as just being an adult, not knowing this when I was younger. And I'm going to make sure that my next generation and so on is going to know this from the early stages on, because it's just crazy, no brainer stuff to me. So knowing this now, what the sacred account is, what is the benefit? Why shouldn't somebody just forget about Mint Builder and partnering with Wealth Dynamics? Why shouldn't somebody just go and buy their own life insurance and just do it themselves?
Yeah, so the easy answer is you can't. The insurance companies require you to work with an agent. And so if you're not working with a licensed agent, there's literally no way to get a sacred account. And so Wealth Dynamics is a licensed agent. Mint Builder now is a licensed agent as well. And so, we're able to actually represent you. It's kind of like having a realtor, except for the fact that you could opt not to use one. With this, you can't. There's no way to not do this without a representative. And so that's going to be something that we'll do for you. And then on top of that, when you work with someone on a sacred account design, like I said, less than 1% of life insurance policies are designed this way. And that comes down to two things: knowledge and willingness, right? So to give you guys some background, when an agent sells a sacred account, they're opting to make about 300% less in commission and income on a policy versus if they didn't design it this way. And so there's a lot of financial incentive for agents not to design a policy this way. This is why you hear all these horror insurance stories, because it pays really well to sell a bad product. And a lot of agents opt to do that. And so that's a willingness, is you've got to find someone that's willing to say, yep, I'm going to take a 300% pay cut to design this the correct way so that the end user can actually get the full benefit out of it. Yeah. The second part of that is knowledge. If you think about it just from a business model standpoint, and Mint Builder is a great example of this. Bullion is a great example of this. We've all seen people who overprice, overcharge on Bullion. And so that's their business model. And so they teach, sell higher prices, higher margins. Mint Builder, it's like, hey, here's your membership. You can get wholesale. Similar with the sacred account. If you've got product A that makes a ton of money and product B that makes 300% less, which one do you think most companies are going to train their people to sell? And these aren't like mom and pops. These are Fortune 100 companies, right? So they're going to train most of their agents to sell the one that brings in more income, not the one that brings in less income. So there's not the incentive for most agents to know about this. So to find someone that understands the concept, is willing to do it, knows how to design it, knows how to service you afterwards, is kind of like finding a unicorn. And so it's you certainly can go look, but you have Mint Builder right here, you've got Wealth Dynamics right here, and we can fit that bill and help you with it.
Yeah, so that's really good to know that, and it is unfortunate in our free market, which I'm all for a free market. Unfortunately, though, that there's a lot of manipulation going on, and most people aren't looking for your best interest. They don't have the mission that Mint Builder and Wealth Dynamics has to actually help people. For example, back in the days when I was still working for this other company, of course, they had their 401k plan, and then with the mutual funds and all this kind of stuff, that they're like pushing on you certain things. And why do you think they're pushing certain things? Is not because it's going to help you and they're going to perform better, but there's certain ones that they get higher commissions on. And so it's the same. It's no different in the life insurance industry too, in other industries. So you really need someone. And this idea, this concept is actually really simple, of becoming your own bank, using this policy in such a way, and even having the backside benefit of having a really good life insurance plan. But in addition to all of that, that part of it's simple, but the back end side of it, of designing it, that's a whole nother thing. There's a lot to it, isn't there, Jerry? Is like the back end of it's pretty complicated to make sure that they're getting the biggest benefit.
Yeah, we have an entire team that does that. We have like a bunch of staff that's their full-time job. So, it's something that I wouldn't outsource. It's kind of like saying, instead of buying metals from Mint Builder, why don't I just go mining and learn how to refine and learn how to punch coins and pour metals? And it's like, or I could just go to Mint Builder and buy metals.
Exactly. Yeah, that's a good analogy, because there's so much in between there. So knowing this, okay, and this is great. I'm sold on this. It makes sense. It's common sense. What can we do to when we go get started? What we're paying this this $250 fee. And obviously there's a design thing in the background. That's a big part of it. But what exactly are the benefits of this initial $250 fee? And is it something that's ongoing, or is it just a one-time thing? What is that all about?
Yeah, so we do charge a one-time setup fee of $250. And so what that does is a few things. The first thing is that gives you 6 months of access to Wealth Dynamics University. 12 months if you buy it on our website is a grant. And so you're getting that for free included with the program. 6 months worth of that. That does cover a copy of my book, Blueprint to Financial Freedom, a copy of
Awesome
my book,
book,
How
by
to
the
Create
way.
Wealth.
I've read it like 3 times.
Yeah,
Great
thank you.
book.
Yeah, so you get a copy of that, How to Create Wealth. You get 4 copies of the Big 3 Challenge Daily Financial Journal. And then in addition to that, you're getting ongoing support and service from our team. We're going to not only build your policy and do the design, the illustration, get you approved. And that's a big point, is like, this is different than most things you sign up for, where you actually do have to get approved. So the insurance companies, they're making you a partner. And so they're going to look at, like, do we want this person as a partner? So they're going to look at medical underwriting, financial underwriting. They're going to look at your background. They're going to look at credit, bankruptcies, criminal history, all of this stuff to make sure that they're bringing in a good partner. And so that's part of what we do, is we represent you inside that transaction as they're going through that underwriting and doing their due diligence on you. We're making sure that we're helping you through that process and that you're getting approved. And so that's a big part of that as well. So there's a lot of value included with that. You get unlimited service from my team, which in and of itself is, calls, texts, emails on just how are things going, what can we help with. On the back end, once you have your policy, we've got a team called the mapping team, and they will help you do things like take loans, repay loans, look at strategies on how to best utilize your cash value. So that's everything that's included for that $250.
Okay. Yeah, that makes sense. And I just love the idea that this is a multi-billion-dollar, industry, and you actually are a private partner with them. And that's, that's what makes it totally different. You're like a board member, basically. You're like they're wanting to make sure that you're taken care of, obviously. And so that's a whole new concept as well for most people, I think, to be a part of that, without having to have millions of dollars, to get into that. Typically, that's what it would take. And there's so much more beyond this part of it that the Wealth Dynamics team has, besides just a sacred account. We're talking about even working your way to become an accredited investor, and they help with all that stuff as well. So getting your foot in with having this first will open up many, many more doors for you. Isn't that right? It's gonna build to, like, make it so you have more access to things later on.
Yeah, absolutely. This is definitely a foundational starting point. And once someone has this, I talked to a guy a week or two ago, and he has 45 of these. So he just continued getting more and more sacred accounts. It's an impressive number. I was like, wow, that's a good job, like very good job. So this does open the door to a lot of other things where you can start building the net worth, the passive income, the savings rate. But it starts here. And so this is really, like, for me, this is where I would have liked to start when I was a kid. If I knew about this, I would have started a sacred account when I was 16 rather than a checking account. And the benefit of that economically is, just think about every dollar I ever made since I was 16. I could still have it growing in that account. What if you still had all that money?
Wow. Yeah.
Right. So that speaks for itself right there for me.
Yeah. Yeah, that's huge. And to think about it. So you said, like, he has 45 accounts. Okay, so President Biden right now has three accounts that he's stated, I think, right? And there's how many other people that are famous people that have multiple these kind of accounts set up? I mean, it's a very common thing amongst the rich and the ultra rich. And so if that's the case, how do they do that? They only have they're only one person. So how, this is something in my mind, maybe nobody else has this question, but just in case they do, how do they have more than one sacred account?
Yeah. So the sacred account, it's based off of 2 main things. It's going to be, typically it's going to be a multiple of your income minus the current life insurance coverage you have in force. So let's say, for example, the insurance companies as a whole, like collectively, all the life insurance companies, they do talk, they do communicate, they get together and say, hey, we will insure someone, let's say, for example, 30 times their annual income. So if I make $100,000 a year, that means in theory, I could have $3 million total in life insurance in force between any different life insurance company collectively. So as my income goes up, that pie gets bigger. So if I make 200 grand next year, well, now I can get 6 million of coverage in force. And so that's going to be something that I have control over as I grow my income. The second part then is, what do I currently have in force? And so let's say my limit is 3 million. I've got 1.5 million with my sacred account. I could open up another one, and I've got another 1.5 million in space that I can use there. So as long as I continue growing my income, I can continue putting more policies on myself. Now, once I have maximized that, I can open policies that I own where I'm insuring other people in my life. I could insure my spouse. I could insure my children. I could insure a business partner, a colleague. And it's basically, it's called insurable interest. There has to be a financial reason to justify having life insurance and coverage on force on someone. So it can't just be a stranger, right? But as long as I've got that there, then I have the ability to open accounts on them too. And so, you can kind of go in sequence of, I'm going to max out as many as I can on myself, maybe on my spouse, I'll put them on my children, do business partners, down all the way down the line. And then I've got all of these policies that I can borrow against.
Right. Yeah, that makes sense. Key employees, things like that. Yeah. So, okay, what if I get into the, I pay the 250, I have everything set up, and for some reason I had this catastrophic thing in my life and I think that the best decision for me is to just cancel everything. I need to like not have this anymore. Can I close out my account permanently? Is that something I can do?
You can. Typically, that's not what I'd recommend. So if someone because you're signing up, you're doing it, it's a forced monthly automated savings plan. So if I say I'm going to do 250 a month or 500 a month, like that is what I need to be prepared to do, right? It's going to be automated. I can't change that number. It's like a bill, but it's paying myself rather than a car payments or rents, right? So if there's a position in my life where, let's say, I can't afford it for some reason, or I have a couple of bad months, I can actually, the first thing I can do is I can borrow against my cash value to cover the premiums, right? And then I can just pay myself back later. That's the benefit of being my own bank, is I can say, hey, it's 500 a month for the next couple of months. I'm just going to take a policy loan, cover my premiums, my contributions that way, and then I'll pay myself back later. The second option is you could just cancel the policy anytime you wanted to. You could just say, hey, I'm done. Just give me what I have in cash value, and let's close the account out. So that is an option. I don't recommend it if we can avoid it, just because the purpose of it, why did we set it up originally? Right? We want to grow that money. And so canceling it doesn't accomplish that. Third is, there's a way to set it to where if you've put enough into it, there is a way to set it to where you lower your death benefit and you have the dividend income from the insurance policy pay for its own costs. So it's called reduced paid up. So we're reducing the death benefit, and then we're having the insurance pay up its own costs. And so that's kind of a way where I can still borrow against it and it'll continue growing. I just won't be putting any more money into it anymore.
Yeah, that makes sense. And I know that it sounds kind of complicated, but the big part that, to take away from all of that is that there's multiple options. You have options, you could cancel, yes. But let's take other steps first to try to see if we can maintain it. But you have all these different availability ways to do it first. And so, and of course, we and Wealth Dynamics will definitely work through it with you to help you to make sure you benefit the most out of it. That's the whole point of it in the first place. So what would be my next steps? Okay, so I've watched the intro video. I watched this video on learning more about it, and now I'm ready to go. Obviously, the first step would be to click on the Get Started button, and you can find, if you're already here now, you know where to find it. But if you're watching this from some other point, then you would go to the shop page, other products. You'll find the Sacred Account, My Sacred Account in there. You'll click on the Get Started. It's going to take you to a form, and that you fill the form out, and that'll be where you pay the $250, and then it goes to Wealth Dynamics. And then where does it go from there, Jerry?
Yeah, so once you've done that, what will happen is my team will actually reach out to you for a welcome and orientation call. And so we'll kind of work through with you the process of how do we get you started with the application. We will confirm your numbers as far as, do you want to put in a lump sum? What's your monthly or annual contribution going to look like? What do you like to use the policy for? Is it for debt? Is it for investing? We'll kind of work through all those things with you. And then we'll basically get you set up with the application process. So my team will do the application with you. They'll go through and help you get your information inputted and get through that underwriting process that I had mentioned. And that does take maybe, it can be slow. It's not the fastest process. It can be, sometimes 2 or 3 months to get you from application to approved, right? So be prepared for a little bit of time involved. We will keep you posted and keep you in the loop on things. But again, you're getting approved for kind of a big deal. You're becoming a partner in a multi-billion-dollar company,
Yeah.
right? So it's going to take a little bit of time. And that's kind of the process is we'll get you approved. We then do your illustration design, meaning we'll actually show you here's what your numbers will look like. Here's what it looks like in year 1, year 2, all the way through, year 121. And you can actually see the performance of it, the numbers, the internal rates of return. And then once that's done, then we finalize the account and you can fund it. And then once you've done that, you'll actually schedule a call with our mapping team. And you'll say, hey, I just did my policy. I set it up. I want to maybe finance a car. How do I go about that? And they'll walk you through the strategy with that.
I love it. So it's simple and straightforward. And I mean, it just makes a lot of sense. I love the idea that you guys handle it. This is a very premium handling. I've worked with insurance companies, all my whole life because we have to have insurances for things. And I've never had anybody, hold my hand, so to speak. It's like you guys are very a la carte. You're going through it. I remember the process. And it was, very detailed, very, making sure that this is 100% to benefit you. And like I said, very a la carte. Nobody's exactly the same. Everybody has different things that they're trying to, trying to reach and goals in their lives and things to cover and things like that. So you guys go through that process in great depths. And so that in itself is worth 400% of what the price you're charging, not to mention all the other benefits you mentioned on the backside of that. So I'm going to open up at this point. I'm going to open up for questions. Anybody has any questions, you can unmute your mic, and if you can't do that, you can raise your hand perhaps, or you can just text your message down there. And then Jerry, if you got other things you want to maybe that I didn't ask you that I missed out on that could be important information that maybe the average person just needs to know. They don't know, what is this still? Well, I need more information kind of thing. You can cover that and we can wait on while we're waiting on people to ask questions.
Yeah, absolutely. I think we covered quite a bit here. And I would say the main thing that I would be looking at if I hadn't yet done this, and this is maybe new information or I'd seen it before and just never got involved, I would be looking at, what's the purpose of it for me? Like we mentioned, there's 4 main things we're going to use it for. So am I looking at using this to pay off debt? Am I looking at using this to build up my cash reserves? Am I trying to self-finance a large purchase? Am I investing? And once I've answered that question, then it's very easy to get clarity on, okay, we're going to use it for this. So here's how we should design it. Here's how much we should put into it. We can kind of back the numbers out from there.
Yeah, that's good. And so we have a question. So Timothy asks, are there any minimum and maximum monthly contribution amounts?
Yes. So minimum monthly contribution is going to be $250 a month. And then maximum. So generally you can put in up to 25% of your income, depending on the company that we're working with and the design of the policy. So let's say I'm doing $250 a month as a minimum. One thing to note is there's a scheduled contribution and then there's an unscheduled contribution, meaning I've got that $250 a month that's scheduled, that's automated every month. That's going to happen. Usually I can put in maybe 3 to 4 times that amount, in addition to on an unscheduled basis. So throughout the year, if I said, hey, I've got some extra cash I want to throw into my policy, I could drop that in throughout the year, and that's a few $1,000s extra that I could put in. That's not required. If I don't do it, nothing bad happens. But it does give me the ability to say, here's my baseline of what's going to go in every month, and then I want to throw an extra, I can.
Yeah, that's good. That's a good question, Timothy. And then he says, and you just answered his second question too. So
Nice.
yeah, that is a really good question because you do need to know that there is minimums and there is maximums for everybody, but everybody's maximum's different, depending on your income. So and that's where it gets really complicated, and that's why we need experts like them to be able to design it, because if you overpay, is a thing called mecking. And you don't want to mech, because then you have to pay taxes, and we don't want to pay taxes that we don't have to pay. That's the whole point of all that. You can also send any questions to support@mintbuilder.com. We'll be happy to answer those for you. So I can't think of anything else here. I think we covered it pretty well on here. Unless you got any other final thoughts here before we head out.
Yeah, no, I think we covered everything. I would say, get started in the process. We do a lot of education. That's why we include Wealth Dynamics University. There's with the university alone, there's over 400 segments of financial education and content in there. So, one of the things that we do with every single client that has a sacred account that they're setting up is we actually have them go through a course and learn all about it. And so, one of the reasons people might not start is they're like, well, I want to learn about this. That's actually the first thing we're going to have you do. So that's perfect. So I would say, let's get you rolling. Let's get the education. Let's make sure you understand it, because this is like gold and silver. It's different than let's give it to the bank and hope they do the right thing, or let's give it to Wall Street and hope they make the right decision. I'm kind of in the driver's seat with this. It's very similar to gold and silver. So I do need to have a certain level of education to actually know what to do and how to navigate things.
Yeah, that's awesome. So yeah, and it is the Wealth Dynamics University is genius, because like you said, you have to take that first. And I remember doing it. I haven't taken a test in a long time. I remember going through that process, and it was like, okay, well, I see this. It's making you smarter and more educated about what you're doing before you do it. So you don't have, you know exactly what you're doing. And it's very, very important to do that. And so, yeah, I do appreciate that. So again, it's not just something we're just going to be like trying to throw at you. It's like, you're going to go through it. You're going to know why you're doing it. You're going to get qualified to do it. And then you can become a partner and actually be your own bank. So it's huge. This is a major thing. So I'm seeing any more questions on here. Okay. Yeah, I just see lots of good comments. So, okay. Well, I appreciate you coming on here, Jerry. And again, like you said, if you have more questions, you're seeing this perhaps from our website or some other resource, you can always email us at support@mintbuilder.com, and let's get started. Let's help you with your wealth. We have all the different ways here to do that, and partnering with a great company here at Wealth Dynamics. So thank you for taking the time, Jerry. Thank you, everybody else. Appreciate it. And we'll talk to you again real soon here.
Awesome. Thanks, Matt.
Thanks.